Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at the legacy side of the equation. Covered a lot of that last night. Today I'm going to do a bunch of charts that I didn't get a chance to talk about during the stream that people have requested. But as far as crypto is concerned, big down day today on a relative basis to legacy. We still have over 3 billion in flows last week. Prices still look relatively okay in the high caps, and BTC is still holding above the cloud. It's nothing exciting, it's nothing fancy, it is still September. We just don't want to drift below 110 at this point and kind of just have to wait our turn. I'd feel better with a bullish TK cross, I'd feel better with price above the key June here, but it doesn't look completely awful just sitting here doing nothing for the moment. We're still in this massive pitchfork since 2023, and the upside targets at this point probably 150 is pretty reasonable if we break 122, and then anything after that we'd have to see what the momentum looks like to get us there. But once money swings out of gold or gold slows down, that's when I'd expect BTC to do better. Solana has done very well. I didn't talk about this yesterday, but it has done very well thanks to a few DATs that have come aboard and said, hey, we're going to buy $1 billion here, $1 billion there, 500 million here or there. And quite quickly, we've moved from 200 to 250 on Sol. And again, it kind of illustrates for ETH, even for BTC, what's going to be the order here, who's going to have the most momentum, who's going to have an easier time doubling from here. The risk is the further you would go down the market cap list, things start to look interesting from a setups perspective, but that's not where most of the money initially is likely to hit. You know, it's going to hit BTC as it did with the ETFs very early over the past year, ETH more recently, and then Sol, even over the past couple months, Sol has done well. It's been quite a journey. So it's probably still a little early to go way, way, way down the market cap list looking for stuff. To me, it makes more sense to take profit from ETH and Sol into lower cap names versus just opening a mega huge fresh position on those names. Here's the Memecoin sector relative to layer 1, 2, AI, DeFi, and gaming. And this is what you'd expect. This is beta exactly. You're seeing an amplified reaction relative to layer 1s. If layer 1s are down around 4%, you'd expect maximum risk to be down 8. And that's about it. You know, layer 1s are down under 4%, memes down more than 8. So it's even amplified beyond expectations, but you certainly need the lower cap names to have a bullish tailwind from high caps actually moving and staying bullish. So we don't quite have that yet, at least, you know, outside of Sol over the past couple of weeks. For the calendar this week, the only thing that really matters is FOMC Wednesday and the press conference. What is Jay going to say? I'm really interested in what he says in regards to inflation, because inflation's slowly creeping its way back up. Tariffs are coming online increasingly here as far as what potentially is being paid. There's a possibility that courts just overrule the tariffs. Lots of stuff still in motion here. But the cuts will have to be justified based on the jobs market, which continues to deteriorate. So I'd imagine he would be heavily focused on that. If we look at the rate probabilities, 96%, so it's basically a lock for a cut. Next meeting, a couple days. And then we should potentially see 2 more cuts. Now, this is going to shift pretty dramatically depending on what Powell has to say. But if we're talking about a bullish Q4, you know, this is what you want to see. We don't want to see inflation taking off. True inflation holding it around 2%. Been very noisy ever since it dropped under 2. It's been very, very noisy. But the closer this can hold to 2, the better, because if we look on the Fed Nowcast, we got CPI creeping up to above 3% here 15 days into September. PCE also headed in the wrong direction. So that's not what the Fed wants to see. And if inflation gets too hot, at some point they would have to say, okay, we can't justify continuing cuts here. Let's wait and see. I'd imagine that would happen closer to next year than this year. But, you know, if this just gets super hot, they're going to stop cutting. GDP also looks great, 3.1. No complaints there. And on the liquidity side, reverse repo just about gone. If you remember, 2 trillion came in, and now it's basically zeroed out. So the next step for liquidity is going to have to come from something else. potentially rates coming lower. And if we look at the bond complex, all these continue to just slowly creep higher. And again, these will probably all move after the meeting this week with Jay at the podium in the purple tie. Everything looks more bullish than TLT, but collectively, these look very, very good for bullish reversals across the board. If we look at the yield curve 10-2, it is pretty deeply uninverted at this point. It's not maximally uninverted, and unemployment is just starting to potentially tick up. Not seeing runaway unemployment just yet. That's where you really have to get worried, when you just see huge, huge jumps in unemployment month over month. Not quite there yet, but that's what the Fed's trying to avoid. Trying to avoid mass layoffs. Here's global liquidity relative to BTC. Hit a fresh all-time high today on global liquidity. Dollar slowly ticking down, which is helping push this higher. And it would be easier to be bearish if global liquidity was stalled out or flat or grinding lower. And you'd say, well, in 2021, global liquidity had a huge divergence with BTC, at least BTC. If we look at total versus BTC, it might be a different story. But we also had our boy SBF selling a lot of BTC at that time. But it's hard to be bearish when global liquidity continues to tick highs. Just is. Now, it'd be different if we had a mega head and shoulders that we're waiting to break down from. We don't have that. We have the inverse of that. We have bullish continuation patterns that haven't reached their targets yet. So to me, this still looks good for potential bullish continuation. And under the charts here, a lot of this is, some of these are out of order, I guess, but the stuff that's moving now is kind of like real estate, shipping, energy, commodities. This is uranium against Coinbase. And this is how you'd want Coinbase to look if it was actually bullish, right? Now, Coinbase may recover and it may continue, but this is uranium today. The U.S. government announced they are bolstering their stockpile of uranium. And this was already bullish, already at all-time highs. And this is a very large day for the ETF today. But if we just look at the comparison, the correlations were pretty high and dropped off against Coinbase in July here. So if we have a catalyst for Coinbase, we may see higher highs here. But if you're curious on okay, we have a pattern and what is news or fundamentals? How does that play into this? Well, you're looking at it with uranium, right? You have the AI energy story, utilities that helped push this higher, keep it higher. And now today we have crazy news about uranium stockpile, right? So coin's still in a relative doghouse down there. Circle on a low time frame, slowly curling up on the hourly. I don't know why this would turn up if rates are coming down, but hey, if we're just paying attention to technicals, this is potentially something to think about for the first time in a long time as a trade idea to the long side, because it is above its bearish channel. It's above the cloud. In a vacuum, it looks decent. Now, if we go to the rest of these charts, again, these are charts that were requested on the stream on Thursday. Autodesk here kind of looks like a mix of IWM and grab. A lot of charts kind of have this reconsolidation before the next breakout vibe to them. This would be a pretty decently sized inverted head and shoulders. Looks like it could very well go higher on top of even a cup and handle. There's nothing here that's bearish, right? It's just looking very, very strong. And if you contrast this with some alts that are either continuing to go lower or just look dead, there's always a trade out there somewhere, and you really don't need to force your trades into meme coins, when they look like this. But hey, that's just me. So as far as the energy sector, this is XLE. I always like to start with broadly some ETF that captures what you're looking at. Are the next couple charts, do they look better or worse than XLE? XLE's kind of gone nowhere for years and years and years, and I don't necessarily see a setup here that looks tradable. Maybe on a lower time frame, inverted head and shoulders. But if we go on to, this is Noble Corporation, similar to that REMX idea. Hell, even similar to Circle and the hourly, right? It's the same type of setup. You're getting a bullish breakout for the first time in a very, very long time with a chart pattern on your side. So that one's certainly bullish. We've got a rig here, RIG, same deal, same setup, same pattern. Certainly looks ready for a bullish reversal attempt. COHN, ascending triangle. And there's a lot of this. I'll get to lift in a second, but even lift is rising above its resistance on its ascending triangle. Baker Hughes, BKR, another company in the energy sector, also starting to lift off. I'd prefer to trade uranium over oil. That's just me. But collectively, all these charts look great. Not sure what this one actually is. Decker's Outdoor. Kind of a multi-bottomed. I mean, it almost looks like AG or IEF. You know, it's starting to come out of the cloud, come out of its shell for the first time in a year. It has paid its dues. It has suffered down here in the 100 to 120, 130 range. Probably just something to keep an eye on if you're looking for trades. CAMT is another one. Inverted head and shoulders up there on the weekly. The issue with these is collectively, what is the expected return relative to where price is today, right? For most people, they would rather just focus on Max 7. They'd rather focus on quantum than deal with thinking about energy or real estate or housing, any of that stuff. It tends to be too boring for most people to worry about. This is Lemonade. Another similar to Grab, reconsolidation after our breakout here. Looks good to go for more. Looks like bullish continuation. To me, Qualcomm, chips company, inverted head and shoulders there, similar to a lot of those oil companies. Last time Qualcomm had a breakout, it basically went from 100 to 200 very, very quickly. So it does have a history of success. It's in a hot sector, chips, semis, and it looks okay. Looks okay. Prologis, not to be confused with Prologic. PLD also trying to break out, trying to do something. History of success previously, again, from 2016 to 2022. Ever since then, it's really done a bunch of nothing. So if I'm going to take a stab at some random company, it's probably going to look like this, where it just consolidated for years and years and years. APLD, another reconsolidation and post-breakout. Looks like it's moving higher. Tons of inverted head and shoulders fractals all over this. Plenty of room for more here from 20 to 50, potentially, on the measured move. Very deep inverted head and shoulders on a lot of these charts because of the recovery in April. I mean, Oklo is another prime example. That's up a ton today, obviously, on the uranium news at all-time highs. Google hit 3 trillion today. Uber's at all-time highs. Tesla's close to an all-time high. Amazon, to me, still looks good. And this is Lyft, another one that's making a multi-year high. So just because crypto doesn't look amazing yet, doesn't mean you can't bide your time for the next 2 weeks in something else, because there's still a lot of great looking charts out there. NEO looks good. EVs collectively look good. It's a stock picker's dream. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.